guys, welcome back to our Sunday sessions. This is where me and Luke, we go to the markets, we pick a few pairs to run through, and we show you the best investment opportunities for the coming trading week. So I'm going to be going first. I'll run through a few pairs that I'm looking at this week. We'll also update you on how the gold trade that both me and Luke were looking at actually played out and how we caught a nice bit of profit on it. Okay, so diving straight into things, we'll go straight to the gold market. Again, this was the one I started with last time, and I wanted to show you guys the trade that we caught on this. So as you can see, we actually managed to enter from that zone that I called out. I was looking for sales between that 1792 to 1798. By the time we got in after spreads, it was about 1791 was our entry. We used a lower time frame for confirmation, but I quite simply just saw a distribution. Price had reversed. We started putting in some bearish structure on those lower time frames, so I found that valid entry and held it for a few days. You can see that price traded down beautifully afterwards. We see many consecutive bearish candles. We got into a nice profit, and as soon as price came to that lower low, we actually took off 80% of the position. And you may be asking, why do we do this? So the second that price actually breaks that low, it set that lower low in place. Now, from any point onwards, it can actually reverse, it can actually retrace, and as it has done here, it can actually invalidate that structure. So as soon as it hits that lower low, we take off 80% of the position, secure guaranteed profit, and then we let the rest run. So you can see exactly why I've done that, because after price set that new lower low in the market, we may have continued to think the bearish structure would be delivered, but what's happened? Price reversed, it came through, blew the stop loss. Now this is exactly why we have certain measures in place in that risk management segment. So the partial closes, moving stop loss to entry once we have partialed, which just means that we secure a nice bit of profit no matter what happens. So this move, it got us 2.4 RR. We always recommend risking 2%, so that's 4.8% return from this move. So now moving on to the 12-hour time frame, I've come here because I want to show you what I believe price is doing longer term. Now that it's invalidated that shorter term bearishness that we've managed to profit from, I need to ask myself, where is price most likely to come when this bullishness continues? So firstly, we have those equal highs, which creates a great liquidity point in the market, concentrated area of stop losses. Just above this, we have that market inefficiency, a large move down where inefficient market structure was put in place, and just above all of that, we have that unmitigated supply zone. So that's three things all pointing towards sales from this area. So looking anywhere between that 1862 all the way down to 1852. Now this is a large range, of course, so we would be looking to go to those lower time frames when price does tap in. And when we do, we just use that lower time frame to see how structure delivers, wait for that reversal, and if so, we'll try and catch that sell. So of course, my take profit is very large on this one because I'm expecting that if we do reverse here, we're going to start fulfilling a much longer term movement. So this sell position is great because it mitigates that last wave in the market, that last real push up. It should hopefully bring enough supply into the market to actually break these equal lows. Once it does, we should be in for continued bearishness. Now I want to be able to catch that entire movement, which is why my take profit is so large, looking at 1,800 pips. Of course, we'd look to partial throughout, use proper risk management, but keeping a small bit of that position on in hope of this longer term move. Okay, so now we're moving over to the US dollar to the Japanese yen, another pair that we've had a brilliant couple of trades off in the past few weeks. Now, this is in a bit of a funny state at the moment. I'll run you through why. We managed to get that sell position here, ride that down, but what happened straight after? We broke this high, which to me would confirm bullishness. We broke that structure, which means we're not actually looking for sells anymore. That was confirmed by a higher low set in the market. So we failed to set a new high, we've put in a lower high, we've also been putting in lower lows. So I would like to see this major low in the market broken before looking for sales. So what I'm hoping is that price will continue trading down, surpass this, and any point below this point, we want to find that reversal into this supply zone and catch sales from there. So exactly why I'm actually looking for sales from this region. So we can see here that price seemed hesitant to continue lower, to actually really break the structure here. And what's happened is we seem to have created a bit of consolidation with a resistance level around here and a support level down here. So what's happened is price has continued reacting, creating that liquidity in the market. We've had that next tap, and what seems to be the continuation lower, and then a high volume push up. Now this instantly tells me the smart money operators at present, there's going to be unmitigated positions in this area, so looking for sales from here is very, very valid. So just to conclude, I'm looking for sales anywhere between 113.85 to 114.03. So get your alerts set here, wait for them to ping, and then use your lower time frames to find that entry confirmation. So the final market I wanted to run through is the US oil. So this was one of the last ones I went through in last week's Sunday session. And if you remember correctly, I was expecting price to continue distributing and hopefully then create that bearish move down. So price has done this exactly, with the distribution, of course, being within this framework. I'll label this up for you now, just so you can see exactly what I'm looking for and how we'd look to trade from this moving forward. So I've labeled up the distribution for you here. All events have been labeled, and you can begin to see exactly why I'm looking for sales in this position. So of course, what happened, we had that phase A, we had the low set of the sign of weakness. Now as soon as this low is broken, we know that the phases in that distribution are coming towards the creation of bearishness. So we had that high set in the up thrust. The UTAD, what we want to see, does that break that up thrust high? No, it doesn't. Creates a lower high in the market, and straight after that we get that major break of structure of that low set. Now what does this do? Instantly confirms bearishness to me. So we put in another lower high, and now I'm expecting this structure, this bearishness, to continue moving forward. So the most valid entry point to me would be this final buy before sell. So getting this supply zone here, looking at it as a last point of supply, and actually hopefully managing to ride a short position anywhere within this region down further. Okay, so if price was to create that LPSY, actually mitigate this zone, I'd then be looking for the sell positions from here. So that 82.1 to 83.4 range, try and find those sell positions. Once price taps in, use the lower time frames for entry confirmation. Now the reason why this is a brilliant position to get in on sales is because looking at this from a higher time frame point of view, if we zoom out, we can see that structurally, we can argue that this is the low set in the market and this is now the high. So arguably this entire range between this low and the high is our trading range, and we can expect that price could actually sell off from here and continue moving all the way down to the lower bounds of this range. So if we manage to get in, I'd actually be looking to try and hold that position for weeks, maybe even months to come. Of course, making use of partial closes, the first one being here. But once this structural low is broken, that's when it does confirm that this move is more than likely going to happen. So that concludes my section of this Sunday sessions video. I hope you enjoyed some of the pairs that I ran through, managed to actually profit from some of the predictions I made last week. So anybody in the learning lounge, you guys would have been able to profit on that gold trade with us. This is something we sent through exactly when we were looking to enter, allowing for everybody to actually catch that move with us and profit nicely. I'll show you some screenshots now just so you can see exactly what we sent out and how we managed to profit from this. If this is something you're interested in, the first link in the description, get yourself in the group chat so moving forward you can catch these moves with us. I'm now going to pass you over to Luke, who's going to do the same thing, run through a few pairs and also update you on some of the trades that he caught and some of the ones that he predicted that would happen from last week.
How's it going, guys? Luke here. So now that we've listened to James's analysis, we're going to jump into my analysis and go through some of the things that I think are going to happen and some of the predictions I've got for the week coming. Now, before we do that, I do just want to go over the results from the previous week and kind of give you a briefing on how we did. So if you remember from the last Sunday sessions video, I analysed three pairs. It was the Euro JPY, it was Great British Pound to the US dollar, and it was also XAU to USD. Now they were all shorts, and we did actually place live trades last week, and they all took profit. Now, as you can see here on the screen, we got a lovely return of 4%. We were risking 2% at 30 pips, and we had a take profit of 70 pips. Now, our take profit was hit, which is brilliant, and we're going to go through exactly how that trade planned out. So, if you remember correctly, when we were actually analysing this pair, I said how we had a tap into supply here, and we saw that price was riding down. We then had a bullish push up and clear rejection from this candle here. Now, as you can see, we had clear rejection to the upside here. So that was a good suggestion for technical traders like myself that, you know, the following move is going to be bearish. So we did get that move, which was brilliant. Unfortunately, I missed that. But as price came back up to this point, it then set a newer lower high, which was brilliant. And as soon as I got confirmation, a break from the neckline here, just where the entry was, we jumped straight in on this trade. Now, I set my stop loss 8 pips above this high here. As you can see, it's 132.39, and our stop loss was 132.48. So it's actually 9 pips. But we say anywhere between 8 to 10 pips. And then obviously our stop loss was in correlation to previous lows coming here. And what I'll do is I'll throw up screenshots of the message we sent out to the guys and the analysis with it. And there you'll be able to see timestamps and everything. Now, moving on to the Great British Pound to the US dollar trade that we placed. This was also placed around the same time as the Euro JPY, and we also benefited from this trade as well and this push down. So, as you can see here, we've had a lovely drop. We had a lovely drop below this neckline, and that was kind of confirmation that the bears are still in control of the market. Now, we took the approach to this demand zone, and as you can see, price was kind of sitting, breaking and retesting and going above. Price was quite liquid and unsure in its direction. Now, what caught my interest was this wick left over here. Now, if we break it down to the lower time frames, you can see how price was really rejecting what was once a demand zone and is now supply. So seeing that straight away, I was looking at trying to find a good enough entry to jump in on this trade. Now, it was only when I saw the bearish dominance after that rejection that I thought it might have been a bit impulsive. We'll stick a trade on and we'll make sure that our stop loss is just above that demand zone, using that demand zone as a safety net. And as you can see, it paid off. Price failed to break above that, and we can see that we had a lovely downfall here after a second rejection. So we took 40 pips on that trade, risking 26, making this trade a 1.5 to 1 RR. So we did actually make 3% on this trade, which is brilliant. Again, I will provide screenshots on the screen now, showing you exactly when and where we placed the trade and why we did it. So just from those trades alone, we did make a lovely 7% return, and then we also took advantage of gold as well. So now that we've gone over previous trades from the previous week, and we have the analysis from the last Sunday session to back it, as well as the screenshots, we are now going to go through some analysis for this week commencing, and I'm going to give you a rundown on some of the things I'm looking at. So yeah, you guessed it, we are again analysing the Great British Pound to the US dollar. As I said in previous videos, this is probably one of my favourite pairs to actually trade, and I feel like I can really understand the structure and the movements that it does make. So as we can see straight away on screen, we have a major demand zone here, which price has tapped into, and then we have the last level of supply that it produced. Now, evidently, price has moved down, giving us lovely bearish structure, but that has been interrupted since tapping into this demand zone here. Now, what are my thoughts for the coming week? Well, I believe that the Great British Pound is going to be strong this week, and I feel like price is going to be pushed up by the bulls. So, therefore, my bias is to buy into this market. Now, where will I buy? Well, what I will do is I will look for a break on this neckline here. So if we just draw this out, I really want price to break above this, as this kind of gives me some confluence that price is still bullish and bulls are still in control, sorry. And then what I will look to do is find a nice entry above this point. If my risk to reward is correct, then I will probably ride it to this point here. This was previous demand, which is now acting as supply. As we can see here, it was acting as demand, but as the price is below it, we would look at it as supply now. Or as some of you may know, support and resistance, this would be considered a resistance level. Now, in order to get a profitable and a bullish trade that's worthwhile taking, we would obviously need to make sure that our risk to reward is correct, and our risk to reward is at least a 2-to-1. And if not, then we will just have to wait for the market's price to come above this point and maybe take advantage of a bull run here. So again, that analysis is quite brief, but that's just how I am. I'm biased to a buy on this position. I won't be looking at sells. I will be looking at buys, as this bear run seems to have come to a close and we've got some bullish activity here. So this being first point of interest and this one being the second, we will need a break from this neckline here before we even look at placing a buy position. So now moving on to XAU USD, we are looking at the 1 day time frame. So each candle represents a day. As we can see here, we've drawn out a blue level of demand. That's just where price has fallen to before reacting, producing nice bullish strength. Now you can see we've got 2 levels of supply. As you can see, this was the last major level of supply within this region here. Obviously this one being the previous, but we also have quite a strong level of supply here. So just looking at it from the day time frame, I believe that price has no real reason to reverse until we reach this point. So my thoughts are price will get to this point and we will either get a break and price will then push to this point, or it will get to this point here and we'll see a nice reversal in price. I am not looking to place a trade on this pair as of yet. What I will do is I will wait for further confirmation of a direction in trend, and then I will look to place a position. So now looking at the 1 hour time frame, it might be a bit easier to understand if I show you it this way. So let's say, we get to the market open, which is later on tonight, and straight away, obviously I'm biased and I believe that the price is going to come up to this point at least before any real reversal or any real interruption. It would be stupid to place a buy on the market open, even though I believe price is going to get to this point. Why? Because anything could happen. Now we look at points of interest and we look at areas where price could react and price could reverse, and then that's where we look to place our positions. So I will be waiting until price does reach this point, and then I will decide on what I'm going to do based on how the market reacts. Now the market could simply go like this and down, in which case I will look to capitalize when I see a key reversal point here, or alternatively we could have a break straight through this area here. Now, as always, I hope you've enjoyed the analysis. Again, it is brief. We don't want to go into too much depth, and also we want to kind of keep our specific ideas and predictions to the people that are actually in our Learning Lounge group chat, which is completely free to join. There will be a link in the description, so just join that, and then there you'll have full access and a full rundown on the pairs that we are looking to trade on the week coming. If you guys have any questions or you have any feedback, then just drop it in the comments and we'll be sure to read it and respond to you. And if you did enjoy the video, don't forget to like and subscribe. So this has been Luke and James from LAGFX, and we hope you've enjoyed the video, and we'll catch you in the next Sunday session.